As ACCA members, when you are operating in the professional world, you could be operating as a tax consultant, you could be operating as an auditor, you could be operating as a fundraiser, you could be operating as an investment banker, you could be operating in multiple capacities. But the one thing that binds you, all of you together, regardless of the kind of work that you are doing and regardless of the profile that you are operating in, is you are bound by certain norms of good professional behavior, certain moral standards, so to say, which are critical for every professional accountant to follow, regardless of what kind of role he is performing. And that is precisely what the discussion of ethics is all about. Now, you have done this discussion already in AAA, in SBR. If you have not done these papers already, you will be doing that in the future. And the discussion on ethics is an important part of your exam preparation. But before you become an ACCA member, you are expected to complete the Ethics and Professional Skills module, EPSM, which also lays a lot of emphasis on the concept of ethics. So why should the SBL subject be behind any of these? As a leader, more than anyone else, you are expected to adhere to, you are expected to stick to these ethical behavior principles. And that is exactly what the next discussion is all about. Do not consider ethics, as a good to have behavior standard. It is a must have in your professional conduct, because that is what truly separates the men from the boys, as they say. And long term success, yours and that of the organization, will depend upon how stringently are you adhering to these ethical guidelines, and are you doing justice to your role as a professional. And that is exactly what our new discussion is all about: professional codes and ethics for strategic leaders. See, now you are leading the organization, you are leading a team of professional accountants. So, all the more reason for them to expect you to stick to these guidelines, because you are the one who is going to set the tone at the top, which is then going to trickle down to all the junior members in the organization. Why do you think we need these codes of ethics, or why do professionals need an ethical framework to operate? Because in an attempt to secure certain targets for yourself, in order to achieve the organizational objectives, in the process of trying to keep the stakeholders happy, it is so easy for any of us to go wayward and commit activities which would be detrimental to us and detrimental to the organization that we work for, leading to a lot of long term damage, which is why a code of ethical principles is necessary, so that you get the right guideline for your behavior. For example, a code of ethics which comprises of standards, rules, guidelines, and values, these are given so that your behavior can be guided in the right way, so that you operate as per principles that have been laid down. And the Hindi word that we say manmani, we don't do manmani, and we don't try to act in an unethical manner only to secure short-term benefit for the organization. Now, these ethical principles are all pervasive, and they are not restricted to one specific area. And in order to ensure that all of us operate using the according to the same ethical principles, the International Ethics Standards Board for Accountants, IESBA, has laid down a framework for us to follow. Like we have the accounting standards, which basically streamline accounting and establish uniformity. Like we have the auditing standards, they also streamline the methods of auditing behavior. Similarly, the code of ethics, and they lay down the principles that all professional accountants, be it in practice, be it in business, be it in advisory, need to follow in order to uphold the highest standards of behavior for the profession. First of all, if you know, there's a difference between a business and a businessman and a professional, right? Not that businessmen have the ticket to operate in an unethical manner, but professionals are viewed with a certain amount of respect. They have come to that position after fulfilling certain academic requirements, after going through months of rigorous technical training, which means that when they operate, a lot of people, the layman, the businessman, everyone puts a certain reliance on the work done by the professional accountant. If you are an auditor and you are signing the financial statements of a company, people decide to invest in a company like TCS, or people decide to invest in a company like Reliance because they know that the balance sheet, the P&L account, the financial statements of these company have been signed by an auditor who is a trained professional, and he is giving an opinion that the financial statements do not have any material misstatement. Any random layman, they will not place reliance on, the word of a finfluencer or the word of an Instagram influencer who says that, what I'm saying, that this company is really amazing and you should invest the money in this company. As glamorous as an Instagram edufluencer is, reliance can only be placed on the words of a professional, because that professional has come to that particular level of authority after passing a lot of examinations. And more important than the technical aspect is the ethical guidelines which he has been trained in. So when the layman looks at financial statements signed by an auditor, what is the dominant feeling? The dominant feeling is that these financial statements were signed by a professional. This professional has technical knowledge and he has acted as per the ethical principles and guidelines. Because of that, we can place reliance on the data given in the financial statements. So there is so much faith that is placed in you as a professional accountant in the capacity of an auditor, and as is the case in any other capacity, your performance will your performance is incumbent on you following these ethical guidelines, which is why the highest standards of professionalism can be achieved only when you function according to the ethical principles. Your output will be maximized, the quality of work will only go up. And see, so many people place reliance on the work that you have done. And if you do not perform your responsibility as you are expected to, there is always a possibility that the public will lose faith in the professional community as a whole. Now, think of the Satyam case. The auditors were put behind bars because, in that case, the world relied on the word of the auditors that the financial statements presented a true and fair view. Public money was involved in a company like Satyam in which people had invested lakhs and crores of rupees, and that trust was broken because the professional accountants did not act in an appropriate professional manner. They did not perform the responsibility that was thrust upon them, and they failed the public at large. So it is very, very necessary, critical for professional accountants to act within the framework of the ethical principles. See, an ethical principles set is not like Companies Act, which is mandatory in that sense. But your very definition of a professional depends upon you following the ethical principle framework. Now, there are five fundamental ethical principles that all professional accountants are expected to follow, and I'm sure you know all of these already. The first one is integrity, being truthful in your actions. So, making sure that whatever information you are giving out to the public, you know that the public is going to rely on your word because you are an educated, qualified, trained professional. So, any statement that comes from you should have the essence of truthfulness and integrity. Then objectivity, not compromising professional or business judgments due to bias, conflict of interest, or undue influence. Think about it. When I hire people in my team, I specify, and if a student of mine or a friend of mine has applied for that position, I recuse myself from the interview process, because if the person interviewing is my friend, there is a very high possibility that my decision to hire him will depend upon my personal equation with that person. And while that will favor my friend and that will favor me, it might be detrimental to the interest of the organization as a whole. And that is exactly where the principle of objectivity plays an important role. As a professional accountant, I have to be bias free so that I take decisions which are in the best interest of the organization and not in my personal interest. The third one, professional competence and due care, maintaining professional knowledge and skills to provide competent service while acting diligently according to technical standards. I have chartered accountant friends who take up who have often told me that we were offered the audit of an insurance company. We had no prior experience, but still we took up the audit. We thought we learn on the job. That's a very brave sentiment, to be honest. But just imagine, because you are not trained in the audit of insurance companies, there is a possibility that you won't be able to perform audit to the highest professional standards. You don't have the knowledge to execute that assignment properly. Now somebody comes to me and says, Satyam, I teach CFA. Can I teach CFA? I know the broad contours of CFA, but am I an expert in it? No, which means if I get into that particular teaching assignment without having the right knowledge, I will do injustice to the student population. So I should not take up an assignment unless I have the professional competence to execute that assignment, which also includes me getting the right knowledge or getting myself trained and getting the experience before accepting a particular assignment on an independent basis. Due care basically means that when you work for others, you are expected to follow the same standards of behavior or the same level of quality that you would input for your own work. So if you are doing your own work with 100% sincerity, when you are doing the same activity for others, the level of sincerity should not get affected. Then confidentiality is again, a defining feature for professional accountants. These days I see so many students and so many young professionals talking on LinkedIn about their findings in an audit, or something that they came across while performing their assignment, and then they talk about it with a lot of pride on social media. You should know that your findings in the course of your audit are not meant for the world to see. As a professional accountant, you are bound by the code of confidentiality. Information that you acquire in the course of executing your assignments should not be disclosed to the world at large unless you have explicit permission from the client. So keeping that information a secret, unless of course there is proper authority to disclose that information, is what confidentiality is all about. And today's young professionals, in the quest to prove themselves or in a quest to get more attention on social media, often end up disclosing this. And let me tell you, if your regulatory body finds this out, there will be disciplinary proceedings against you. And the last one is professional behavior. Professional behavior starts right from wearing the right attire to a meeting to upholding the highest standards of behavior at workplace. I mean, I have known people who have shown up to a class drunk, or imagine that a chartered accountant gets drunk, or indulges in some substance abuse, and then he drives a vehicle and that vehicle hits the lamp post and there is an accident. What will the headline be? The headline won't be ki XYZ, Mr. XYZ caused an accident. Chartered accountant from Delhi caused an accident is going to be the headline. No one knows you, no one knows me, but they know Institute of Chartered Accountants of India. They know the ACCA body. So for them, it's maligning the profession. You don't matter, but the profession gets impacted, and you have to maintain the highest levels of behavior, of professional behavior, when you are operating in the public domain. Now, the objectivity of a professional accountant has to be beyond question, in the sense that when you are dealing at a workplace, say for example, when it comes to allocating contracts to a third party external contractor, you want someone to build the factory extension for you. Now ideally what you should do is you should invite quotations, you should evaluate the quotations on price, quality, and other factors, and then choose the quotation that best serves the interest of the company. But in order to do favors to a family member, you allocate the project for expansion of the factory to a relative. Now it what happens in that process is the company might lose out on an opportunity to get the best possible price for constructing of that factory extension. I mean, this is something that, think of the Videocon ICICI case. Chanda Kochar lost a lot of face because ICICI Bank, for which she was the chief managing director, gave loans to Videocon, a company in which her husband was one of the key managerial personnel. And it was not a loan of 1 crore, 2 crore, but the amount of loan ran in thousands of crores. Now, when so this is like a wife granting a loan to the company in which the husband works, and the husband is the chief managing director. When ICICI Bank was taking this decision, adequate disclosures must have been made by the CMD Chanda Kochar. She should have recused herself from the meeting and she should not have participated in the vote. What was discovered later was there were several irregularities in the loan granted to Videocon, and proper documentation and collaterals and a whole lot of other formalities and background checks that you would do for a loan of that value were not done, simply because the CEO of Videocon, or a senior managerial person of Videocon, was connected with the CMD, or was the husband of CMD of ICICI Bank. So she was not objective in her decision, which led to her downfall and which impacted ICICI Bank also in an adverse manner. Now, when you are working in today's world, in modern world, it is necessary that your approach to ethics should be flexible. See, there are two approaches. There is a rules-based approach. And what is a rules-based approach? It lays down, for example, the list of things that you are supposed to do. say in a rules based approach, I have one rule which says stealing the following is wrong. Stealing money is wrong. Stealing phones is wrong. Stealing biscuits is wrong. Stealing jewelry is wrong. I make a list of 200 items and say that stealing these 200 things are wrong. And if you steal any of these 200 things, you will be put behind bars. So that is a rules based approach. But if Satyamed ends up stealing an item which is not in the list, then he will not be put behind bars because we are following a strict, true to the letter, rules based approach. But a principles based approach to ethics is different. Here, you define a broad principle which says the act of stealing is wrong, and then you define what stealing is: unlawfully taking away something that belongs to another person. You identify the problem and you give a general broad outline in terms of what is considered as incorrect behavior from an ethical perspective. Now that is the principle, and when a principle is established, it can be moved around so as to make sure that a whole wide gambit of activities is included, and you operate and you respect the spirit of the provision, respect the spirit of the ethical principle, and not act solely according to what is written in black and white. So that is the approach which is called the principles based approach. You should first of all identify the threat, in the sense, is it a threat to the confidentiality? Am I being intimidated into doing something? Is it a self review threat? Is it a self interest threat? I should identify the threat, then I should evaluate the significance or how deep is the impact of that particular threat, and then I should take appropriate actions in order to remove that particular implication on my overall business operations. We look at examples of what these threats are. Just give me a moment before we step into that particular analysis. Let's assume that I am the chief executive officer of a company, and it is the company policy that contracts should be granted to individuals only after going through quotations that have been received from them. Now there is a contract for providing tea to all the team members in the afternoon. I know someone who is in need of money. That person is related to me in some way. So instead of going through the entire process, I give him the catering contract for tea and afternoon snacks. Is it unethical? Yes. Why? Because I should have been objective. I should have evaluated quotations. I should have considered all of these points before going ahead and allocating the contract. But is it a very significant threat on the sanctity of my business operations? The answer is no. Is it unethical? To a certain extent, but how deep does the risk run? What is the financial impact? Maybe not so much. But we have to get into a contract wherein we need an outsourced third party to do the payroll operations. Now, payroll is a far more critical area for us, more critical than serving tea and snacks in the afternoon. There are regulatory compliances involved, the stakes are higher, and it is necessary, it is critical that this allocation of contract should be done the only after considering the capacity of the executor, only after understanding his professional competence, his expertise, his experience, taking a quotation from him and from 10 other parties, evaluating quotations, and then coming to a conclusion. Now, here again, I gave away the contract to my sister because she's also qualified, she's also trained, but I did not go through the whole selection process. Now, here, the impact of me not acting in an ethical manner has far reaching deeper impacts on the company as a whole, and that is why here my reaction or the company's reaction to this unethical activity is going to be far stronger. Now, you will have to take appropriate action in order to prevent something like this from happening. So, in a principles based approach, see, both are unethical actions, but giving away the contract for tea and snacks to a relative and giving away payroll processing contract to a relative have two completely different implications on the financial statements. So, that is where the principles based approach is considered to be far more superior. You are not penny wise, pound foolish. You evaluate the circumstances, you understand the specific situation, and how deep is the financial impact, how deep is the impact on the overall functioning, and then you take an appropriate action accordingly. Now, when we talk about a principles based approach, we can see so many strong companies or strong corporates around us who have set the bar very, very high with how they have developed their in-house corporate governance codes. For example, the IKEA supplier code, it communicates standards for suppliers to meet IKEA's people and planet positive value chain objectives. The foundation is built on international standards, legal compliance, and company values. Now, IKEA is, IKEA is into furniture and, build your own furniture and ready-made furniture and all of that. And for a company like IKEA, which is massive in terms of its scale of operations, it's necessary for them to project themselves as leaders when it comes to management of not just the profits, but also of the people who work with you and not having any adverse impact on the planet on which we operate. So it's basically working with the triple bottom line approach in multiple ways. Now, the IKEA supplier code makes sure that they only work with those suppliers who fulfill these requirements that IKEA has laid down, and the suppliers are made to sign this code of conduct before they start interacting and working with IKEA, before they start supplying to IKEA. And should they reach a position where they are in contravention of the conditions laid down under the IKEA supplier code, IKEA reserves the right to terminate the contract with them and might also decide to add penalties. So the IKEA supplier code again plays a very important role. And for IKEA to maintain its integrity and maintain its image and ensure that they operate as per the ethical principles laid down. Same goes for Microsoft. These are standards on an international level. If we look at India, I mean, the Tatas are pioneers when it comes to, having corporate code of conduct. Tata Group has always been known to operate in a highly ethical and community driven manner. In fact, there's a book by a writer called Girish Kuber. If you get an opportunity, read it. The name of the book is Tatayam. It's basically on the empire built by Tatas. So right from Jamshedji Tata, JRD Tata, right all the way down to Ratan Tata, he has described in detail what makes the Tatas. What is it that they have done? How have they developed and operated in the most ethical manner, which is the reason why they are looked at with the utmost amount of respect. I mean, how they dealt with the aftermath of the 2611 attacks is also a classic example of how the corporate code of conduct can go a long way in establishing integrity and in cementing your image as ethical operators. See, when you do things in the right manner, naturally you will attract more talent, you will attract more customers, you will attract more investment, and business continuity will not be a problem. Now, there are often quite a lot of situations where a conflict of interest can occur. A conflict of interest is a situation when personal or private interests appear to influence the objective exercise of official duties. Now, as I told you, if my sister is interviewing in my company and I am a part of the interview process, naturally I will be biased and I might end up hiring her even though she might not have the qualifications to do that. This is a conflict of interest. My personal relationship is becoming or is coming in the way of me executing my professional responsibilities. Or competing interests interfere with the obligation to act in another's interest, obstructing fulfillment of duties. Now, we are participating in a tender to secure a project. My sister's company is also participating in the same tender. And Indians, emotional fools of the highest order. I might not be so aggressive in pursuing the deal because I know that my sister is also involved in the tendering for that particular project. So that will prevent me from fulfillment of my duties. In that case, I should be taken off the project and somebody else should be put in my case. Now, leaders, see, we are studying SBL. Leaders are the ones who are responsible for helping the organization stay true to its mission and achieving the vision of the entity without compromising on the values. Now, if they let their personal relationships, personal equations come in the way of discharging their duties, then they will never be able to stay impartial, and you will always have a situation where the personal equation ends up harming the overall interest of the organization. And these ethical threats and failures occur because of multiple issues. Now, there are different types of ethical threats, and I know you have studied that already in other papers, yet I will do a quick recap of these. First one is the self-interest threat. Now, this is very, very common in case of auditors. Say I hold shares in a particular company. I hold 500 shares of Reliance and now have been appointed as the auditor of Reliance. I find that, there is a major misstatement or a major cover up, major fraud in the financial statements. Now, I am tempted to present that in my audit report as a failing of the company, and I want to say that the company does not present a true and fair view. I know that the moment the statement goes out in the audit report, there will be lakhs and thousands of people who have invested in the company who will read the audit report, and after reading that there has been a misstatement, they will start panic selling. When they start panic selling, the value of these 500 shares or 5000 shares that I own in my portfolio, the value of these shares will fall and my wealth will get eroded. So I'm scared that if I give out the audit opinion correctly, then the share price is going to fall down. And if the share price falls down, then my wealth will get eroded. So me doing my job as an auditor is harming my own portfolio and self interest. So I end up not performing my responsibility as an auditor properly. That is the self interest threat. There could be an intimidation threat where I am coerced either emotionally or through other threats into saying yes to a particular activity or condoning a particular activity in the company or allowing certain unfair practices to be followed because there is an emotional blackmail or a threat to my physical safety, which prevents me from performing my duties diligently. Then there is the self review threat where I end up reviewing my own work and I will never be able to find out flaws and faults in the activity that I have done. There is advocacy threat. And all of these threats have long term implications on the success of the organization because they prevent the leader, they prevent the professional accountant, they prevent the auditor from discharging his duties in a manner that is expected. So sometimes cultural and environmental factors play an important role. If the culture that you have fostered is one where you are allowing a lot of overriding of controls to happen, is basically a culture of dishonesty that has been fostered in the organization, then in those circumstances it's very difficult to rise above that culture and do something which is correct, which is right, but then other people in the organization are not used to it and they will object. There are times, when in order to win recognition, when in order to win the love and support of your team members, you might end up doing activities which are not ethically right. Some problems could be ingrained into the system, and you will find a rationalization of unethical behavior. There are so many organizations where employees are like, what, they torture me and they keep me working for 14, 16 hours a day. It's okay if I steal pens and if I steal paper from the company. Or they might have a situation where they will divert some of the company revenue or some of the company contracts to their own for their own private benefit, because they know that if the company is making me work and not compensating me adequately, if I cheat the company, if I indulge in some fraud of a minor value, it is me just getting my revenge. It is me getting paid back for what has really been my effort. So that is how they justify the unethical behavior. And in multiple cases, there are knowledge and governance gaps. People don't know what tantamounts to unethical behavior, and that leads to them justifying or committing acts without having appropriate knowledge that this activity is unethical in itself. And ethical principles and ethical behavior, or the lack of it actually, show themselves in the most unexpected areas. Okay. You will be surprised to know that this happens everywhere around you. Power and treatment issues, misuse of power through unfair terms, not letting individuals speak out because you are in a position of power and you can crush the voice of the other customers. Preferential treatment to loyal customers, you will see that happening in so many restaurants and other jewelry shops and all of that. Offering or accepting bribes, Indians know all about this better than anyone else. And there are times when so much unethical marketing is happening. Like today you will see so many ACCA coaching institutes promote blatant lies like, your first job after becoming an ACCA affiliate is 25 lakhs or 50 lakhs or some nonsense like that. You know, as much as I do, that it is not possible. Not because ACCA doesn't have value, ACCA has a lot of value, but you don't have any practical experience to be demanding that kind of money. So when gullible, I have seen so many gullible people fall prey to these tactics used by coaching institutes. I have seen people selling secrets of their former employers only for the sake of money, or just for the sake of, getting or putting the other people in trouble, and they get some sort of a sadistic pleasure out of it. So there are so many unethical activities that go on around us all the time. I mean, people say that products are organic when in fact they are not organic, and that's cheating the population. And you will be surprised to see that in our ACCA coaching industry itself, there are so many misleading marketing points that are told, so much misleading information that is conveyed to gullible parents and students. And then you have no intention to comply with that, you have no intention to fulfill that, and yet it continues to happen. I mean, ACCA has put across a simple conflict resolution framework where they say that gather the relevant facts, get an understanding of where exactly or what exactly has gone wrong, identify the ethical issues involved, check how deep does the impact of that particular activity run. Okay, check the financial and other implications. Apply the five fundamental ethical principles to find out what exactly has gone wrong, what is the impact of that financial impact, reputational impact, overall impact on the entity, and then decide what would be the most appropriate course of action to tackle this situation. Whether formal or informal, ethical issues should be documented and see. The solution to these ethical challenges is not amputate that particular individual from the company or stop that particular activity. You should come up with the right safeguard to ensure that something like this does not happen again, while you safeguard the overall interest of the organization. Now, we already discussed the five categories of ethical threats: self interest, self review, intimidation. We were left with advocacy and familiarity. Familiarity is close relationships creating too much sympathy for others' interests, compromising professional judgment. Or, it happens in case of auditors also that, they have been auditing a particular client for 4 years, and in the fifth year, they believe they know everything based on their experience of the last 4 years. If they, for example, they have seen that, usually there is no problem in the TDS payable ledger, that ledger rarely exhibits any problem. So they tell the incoming team member that, you know what, don't look at TDS payable ledgers because there has never been a problem. Focus on other areas. So because they are over familiar with the client, that prevents them from doing a thorough check and a thorough evaluation of all the ledgers. And what if a situation happens, where uh, that particular ledger only had a problem in this year, but you ignored checking of that ledger because you thought here last 4 years mein there has been no problem, so how could there be a problem in the current year? So that basically prevents you from discharging your responsibility as an auditor properly. And or you have very close personal equations with someone, and you have been appointed as an auditor of their company, and you have always felt that this person is an ethical, straightforward, God fearing person, for lack of a better word. So there can't be any problem in his books of accounts and in his operations. So you don't put in that extra effort of checking everything carefully. And that also impacts the quality of your audit opinion. So that is again familiarity threat. And of course, what is advocacy threat? Promoting a position or opinion to the point that subsequent objectivity may be compromised. You are trying to promote the interest of the client. For example, the client appoints you as a consultant for getting a loan from the bank. You are already an auditor of that client. Now, when you are obtaining a loan from the bank, you have to give projections of financial performance and financial position for the next 5 years. You know that to get a loan, you have to exhibit good financial performance, and you have to show a strong balance sheet. So even though it is not actually the case, you give extremely optimistic projections to the bankers and the investors because you want to secure funding for the client. See, in reality, you know that the client's financial position is not so strong, but you deliberately push a very rosy picture for the client in the projections, because you want the client to get the loan from the bank and your fees depend on that loan. So there you start promoting or pushing the interest of the client, and before you realize, you have already compromised your position and you are no longer objective. So that is your advocacy threat. Now, what is the three-step approach to managing threats? Either you could basically your intention or your job should be to reduce the threats to an acceptable level. Like I told you, Satyamed, the CEO, deciding who should be the vendor for tea and snacks doesn't have a very deep impact. But Satyamed deciding who should be the payroll processing entity has a far-reaching impact on the financials. So I might not be able to eliminate all the threats, but I should at least be able to eliminate those threats which have a deeper impact on the functioning of the entity. So, how do you eliminate threats? You remove the circumstances, interests, or relationships creating the threat entirely. Or you could have a policy, where you have decided not to conduct any transactions with related parties. That could be elimination of the threat. That the company policy is very clear. Do not indulge into any contracts whatsoever with a related party. Or you could have, you could apply a different kind of safeguard, in the sense where elimination isn't possible, implement safeguards capable of reducing threats to an acceptable level. You cannot get rid of all the related party contracts that have already been entered into. So you apply additional safeguards, you apply additional cautionary points, or you apply additional checkpoints to ensure that all transactions with related parties take place on an arm's length principle, and you appoint an external consultant to vet whether the transactions have taken place on an arm's length basis. Or you could reduce the activity with that particular related party, and that could itself be another way of managing a threat. Now, implementing effective safeguards. Safeguards are actions taken by professional accountants that effectively eliminate threats to compliance with fundamental principles. Basically, have an external party step into the picture and perform a review of that particular area where you have transactions with a related party, so that an external third party like a transfer pricing expert can give you a written opinion stating that the relations sorry in spite of the related party connection with the other entity, the transactions have taken place at an arm's length price, and therefore the financial statements are presenting a true and fair view. Or ensuring that all transactions with related parties are adequately disclosed in the financial statements, and no point is kept hidden from the stakeholders. And when you are performing these assignments, make sure that the related party is not plotted on the assignment. Like, if there is a bank and the bank has to grant a loan to one of the relatives of one director, then when you are voting on a decision to decide whether a loan has to be given to this particular director or not, to the relative of this particular director or not. If it is Satyamed and the bank wants to give a loan of 200 crores to his sister, and then the board of directors is going to sit and decide and discuss and vote on whether the loan should be given to her or not, Satyamed should make adequate disclosures and he should not be a part of that decision making process. So, objectivity can be maintained to the highest extent possible. And for that, you need to be morally upright. In the sense, you should have zero tolerance policy for fraud, bribery, and corruption. Fraud is an intentional act involving deception to obtain unjust or illegal advantage. Risk relates strongly to management culture of honesty and ethical behavior. Uh, a company like Satyam, for example, so much in the balance sheet was actually not present in reality at all. So I could make this conclusion that the directors of Satyam, they had shown assets worth crores and crores, but these assets did not exist. So don't you think that is fraud? You are presenting an information to the stakeholders saying that we own assets worth 3,000 crores when you have absolutely nothing in reality. You are zero. So that is fraudulent misrepresentation of data. Bribery is accepting or offering bribes in order to get something done. And that is, in a way, that's detrimental to the overall harmonious function of entities, and it gives you an unfair advantage, but it is not going to be helpful in the long run. I mean, we know so many cases where if the bribery is caught on camera, then your reputation is tarnished, and then nobody would want to work with the company. And of course, corruption, I mean, who doesn't know how it has turned the fortunes of political parties? Congress, for example, has been in the limelight for the longest time for creating an atmosphere of corruption. Now, I'm not saying whether I agree with that statement or not. All I'm saying is that if there is an abuse of power that is given to you, where you are making decisions which are not in favor of the society but in favor of your families and friends, and you're going against the rules in order to favor a certain group of people, those corrupt practices will get caught someday. See, they might give you a temporary leg up, they might give you a temporary step ahead in the competition, and but ultimately, that indulging in bribery, corruption, fraudulent activities will have long term consequences. You will lose the faith of, or you will lose the trust of customers. And in today's day of social media, anything and everything which you say and do can be recorded on camera and can be presented to the world at large. And that will ruin your reputation. And the moment your reputation is ruined, then it's very difficult to revive that. It it will have a very negative adverse short term impact on the morale of individuals in the short run, and that is something which you should try to avoid. Countries which, certain countries which have a historical proven record of corruption have gone to the dogs. Their reputation has gone to the dogs. Nobody wants to do business with these countries, and that impacts the overall economic health as well, which is why your stand against fraud, bribery and corruption has to be very, very strong. Now, we should be looking at six best practice principles to combat fraud, bribery, and corruption. Okay, let's have a quick look at these. So the first one is proportionality. Preventive procedures based on risks faced and nature, scale, and complexity of activities must be clear, practical, and effectively implemented. What does that mean? So preventive procedures have to be put in place so that uh, you make sure that there are no unfair means that you are using in order to win contracts. That, of course, depends on the nature, scale, and complexity of activities. If you are trying to secure a huge contract for the company, you should take every step to ensure that the people leading the project are not indulging in offering bribes to government officials in order to win the contract. Because should that come out in the public, then you will end up losing the contract, and you will end up impacting your reputation. There has to be top level commitment, which means the commitment should be demonstrated by senior management. You should do a regular risk assessment and find out if there are chances of fraud. For that, your internal audit teams might be of great use to you, who will regularly highlight the fraud risk factors while evaluating the performance of different areas. Your due diligence procedures will also help you in order to find out that you do not associate yourself with clients, with suppliers, with employees who might have a slightly tainted or questionable background. You should have a clear communication policy which respects the highest level of transparency. And a lot of organizations these days have started going in for zero tolerance policy. There is a list of activities which includes sexual offenses, which includes finance offenses, stealing, embezzlement, so on and so forth, and there is zero tolerance. If that crime, so to say, is proved against you, then there is no hearing. You are immediately fired from the company. And then, of course, regular monitoring and review. This helps you to ensure that even if some fraud or some bribery or corrupt practices have taken place, you can nip those in the bud and implement appropriate safeguards at the right time. Now, the four-step internal audit assessment for fraud risk. See, what is internal audit? Internal audit is, see, audit is checking. Any even statutory audit is about checking something. So internal audit is also about checking something. But what are we checking? We are trying to see whether the processes and the standard operating procedures laid down by the organization are being followed or not. So that is the first activity which we are checking. And we are trying to find out in internal audit, are there any risks that the organization is facing because of non-compliance with processes, because of not following best business practices. For example, if an organization has if the company has a policy that purchase of fixed assets with a value of greater than 50,000 should require approval of the department head. Now, when I was going through all the fixed asset purchases, I realized that there were around 20 transactions during the year which had a value of more than 50,000. But when I did a thorough checking, I realized that a written approval from the departmental head was not received, which means someone in the finance team who was processing payments allowed the purchase of these fixed assets without checking whether uh, an appropriate approval from the competent departmental head was received or not. Now, think about it. It could be an oversight, but it could also mean that the processes are not strong enough and team members could have some sort of a collusion with the person who is responsible for processing payments, and in that process some employees might end up using this to their own advantage, where they take benefit of the fact that these processes can, or these controls can very easily be circumvented, and individual employees of the company can purchase assets for themselves in the name of the company by making the company pay, simply because your internal controls were not operating effectively. Now this is an inherent fraud risk, and the four-step internal audit assessment includes this as the first step. Identify the inherent fraud risk, identify the controls, perform a detailed understanding of processes, perform a process walkthrough to see whether controls are working effectively or not. Ideally, how should the how should the control operate? That the person who is processing the payment should not be allowed to press the button for processing the amount unless the particular payment request is accompanied by an email copy of the approval. So again, that is how you map controls and that is how you ensure that they are operating effectively. You will Post that, you will have to identify and manage residual risk. While you might take care of larger implication risks, because they have a deeper impact on the financial statements, there could be certain risks which are still not caught by internal controls, and now it will be your responsibility to identify these residual risks and tackle them. And post which you will have to perform continuous testing, maybe evaluation every 3 months to check whether the controls are operating effectively, and if any fraud is expected to take place, or if any fraud has already taken place because of these weak controls, you put in appropriate safeguards and you improve the process altogether so that these fraud risk factors are minimized. So with this, we are done with the discussion on ethics and ethical principles and controls. We will dive deeper into other topics in days to come from tomorrow onwards.